Good morning, traders, and welcome to Thursday, July the 7th. It's a morning update presented by Mark Owen. Okay, so today we're just going to have it's going to be a very brief video. Reason behind that, we've obviously got ADP non-farm figures today. We've also got NFP tomorrow, so the liquidity in the market's not going to be fantastic. We had the FOMC minutes last night. So we saw a little bit of a sell-off in dollar prior to that, and then obviously what actually happened in the minutes and what was discussed. So it turns out that the word uncertainty was used a mere 13 times in the minutes. They were also talking about how the data throughout June was good enough for a rate hike in July. However, the concern was that the Brexit vote was coming out 8 days later, and should the unexpected happen, then obviously they didn't feel it'd be right to raise rates with such a decision looming. Obviously, we all know the outcome of Brexit, and it was probably a wise decision that normality didn't come back into the realms of raising interest rates just yet. So now, obviously, after Brexit, there's pretty much 0 to literally maybe a 5% chance of a rate hike in July, but we can basically write that off. I think non-farm payroll is going to be a big indicator of what to expect. Forecasting in and around 180,000, I believe, tomorrow, but we'll see from today's numbers. Will give us an idea of what to expect. We've had 9:30. We've got the manufacturing production from the UK. Obviously, we'd like to see a better than expected number in here after the sterling's been hit so hard, moving from 150 down to 128. Currently sat mid 129. So really, we're looking for some half decent numbers here. And then last but not least, we've got the crude oil inventories. We'll be looking to see what happens on this note. We've got crude sat between sort of 51 and 46 at the minute. It took a bounce from 46. 46 is a key level for us. We'll be looking to get short this market in and around $50 to $51. Stops above sort of 52, 52 and a half, and then look to target 46 as a 46 as a first target if we can get short from there. If not, what we'll look for is a break of 46, a clear close below that level on a daily chart. Well, it'll be weekly now, no doubt, if it does happen. And then we'll look for price to move back up in and around the 46 area to short down to 42 as first targets. And if we're going to hold the positions and maybe look to run those a little bit down towards $38, $39. In terms of positions that we held in the FX market, we closed all of those last night prior to the FOMC. We got decent profit on the table. We were going for extended targets on Kiwi, but we just wanted to add to what had already been a great week, great start to the month. So it was a decision in-house, and we passed that message on to all our protege members that we will be closing all FX positions due to FOMC. So any followers that didn't actually get that message, because you're either not part of our family in terms of trading community that we speak to on a 24/7, then I apologize for that, and hopefully the market will still keep coming down. We do try and post most updates on Instagram, but sometimes obviously this can't be done for certain reasons. So guys, we hit target 1 anyway. Everyone that did take that trade hit target 1, so everyone should be thankful for that. And we also had stops to break even, so everyone made money on that trade regardless of what happened. Okay, so the Nikkei, what we're looking at, as you probably heard on my last commentary a couple of days ago and the one the week before that, I'm looking for the Nikkei to get back down into around the 15,000 barrier. We come down to 15,000, I'll be looking to buy this market. Again, this is something we could probably see with the NFP results. If we get any sort of numbers, the forecasting 180, I think anything below 140, 130, which could happen, seeing that we got the 35 or 38,000 it was the month before. We'll see a big increase in yen. We'll see money flow, leave dollar, leave equities, we'll see the markets drop back significantly, and we could probably potentially see that drop into the 15,000, where then I would look to see maybe some sort of intervention call, government prop-ups, or the plunge protection team, as I like to call it. So the 15,000 is a barrier I'm going to watch, and that will probably correlate quite nicely with the yen hitting sort of 99 or 100. I will be closing the yen long trade for 100. So we've got an order at 100. I will be closing that through NFP, because if the numbers are really bad, we will see big money flow into yen. Okay, dollar index, well, it's a bit choppy, it's a bit messy. We did get a nice move above the 96 barrier, but then we can see this sort of last, 7 or 8 days, it's just sat in a little range. We need to see it do something. I think NFP will actually create that move for us. Hopefully it will be a directional move and not a non-result, let's say. I do want to see some direction, because obviously that will bring FX back into the market. Right now we're really focused on trading commodities, and the commodities we're absolutely killing it, if I'm honest. So well done to all the guys that are taking the commodity trades, and it's understanding which markets to trade and when to trade them. It's not about trading every single market every single day. Yeah, we wait for a particular setup, we highlight it way in advance. Once it gets there, we trade it, and we trade it with conviction. Sometimes we win, sometimes we lose, but when we do win, it's very, very positive reward to risk. So dollar yen, this is the market that we've been watching for, it seems like, weeks now. It's in our sweet spot, it's in our zone, but the downside, like I've said, is we've got the non-farm payroll. What results are going to come out of there will depend on what we see in terms of the money flow for risk on, risk off. So orders at 100 will be cancelled tomorrow. Yeah, not looking to get long. I missed that entry yesterday by about 15 pips, only to rally 130 odd pips. So that was a little bit close, annoying, whatever you want to say. But listen, that's the part and parcel of trading. Yeah, so we can't get annoyed when these certain things happen. We just have to deal with it. Okay. Gold. Okay, so this is a market. I did have a trade in on Tuesday, which got stopped. It was a losing trade, but hey, we've got to take a few losing trades in order to find the right winning trade. As long as we're doing it in a disciplined, methodical, risk-calculated manner, then there should be no issue. So right now we've got a potential shorting opportunity again. I was maybe a little bit aggressive with my initial short a couple of days ago, but the next sort of rally that's taken it up to 1372, 1373 is bringing it right up to that trend line. We've got a commitment at traders short signal, so I'll be looking for certain price action now to run this back down. We'll look at 1300 as a first target. You can see that indicated with this blue arrow down here, and potentially we'll then see if we can get down to the 1250, 1240 barrier highlighted by the red arrow. Just to add, our long-term bias for gold, by the way, is long. Okay, so the correction we're looking for will be just a short to mid-term correction if it happens. Well, here's our trade of the last few weeks. It's been the best trade over the last few months. It really has just added serious weight to the account. We went short initially up here. It came down, hit first targets, moved a bit lower, came back in. We had a sell limit. It's hit second targets down here, and we've now got third target waiting right down at the bottom, which is September 2014 lows. Can't argue, can't fault this market. It's doing exactly what we expected. We're happy bunnies. Next market we're short in is coffee. We had a lovely move down yesterday, but then obviously there was a bit of a correction on all commodities. Whether that was down to the weakening of the dollar late in the afternoon, who knows? But we can see we got triggered in. The market looked to be moving very well towards our first target, bottom of the channel, but did have a fair bit of a correction towards the end of the day. But all in all, still happy with this trade. we'll see what happens. We'll be managing it carefully, looking to reduce risk as price moves in our favor. Last but not least, we'll be looking at wheat. Okay, so we've got a pending order sat here. This order is, yes, it's a technical trade, but it's also a trade based on seasonality. So we've got a seasonal pattern. We're looking to capture the next part of this wheat move, which in theory could potentially break these highs. That's why this is marked here. If it is going to follow a seasonal pattern, it should break this high here. But hey, we're happy if we get anywhere in this area here, 49s, top of this falling wedge. If we break out of it, fantastic. You can see there's no target set, so we will be watching this and we'll be monitoring it closely. Okay, so that's it from the morning update today. I'm Mark Owen. Just to give you one final overview, that we do have a trade with Phoenix Blue trading day on July the 19th. If this is something you or a trader friend would like to attend, then what you need to do is drop us an email at info@phoenixblue.co.uk with Trade with Phoenix Blue July the 19th as the subject. Give us your contact number and full names, and what we'll do, someone will be in contact with you to confirm your seat at this particular event and give you the full details. If you've got any questions about today's content, or you want to have a particular topic discussed on one of our morning updates, then please drop us an email or put it in the YouTube channel. Hit like, share the channel with as many friends and traders as possible. We're looking to build this community. If you'd be interested in live trading days via webinar, if you could drop me an email as well, because this is a service that we're looking to do on maybe 2 or 3 days a week. I'd be interested for your feedback. Okay, guys, thank you for listening, and I look forward to your emails. Take care. Bye-bye. Have a good day.